Welcome to TradeTheNBA.com. This is John's reports for the 31st, and we're about to end the month. Coming off the highs, it's been not all that interesting a month when you look at it from the standpoint of this is where we opened. We're just fractionally above that area, and that's mostly just been this chop back and forth. The ES actually held up remarkably well given the uh, soft readings, but there just hasn't been significant enough short interest other than these small little bursts to really kind of bring things down. And as I pointed out yesterday with our 50K chart, we had some positive extremes that we were looking for the expectation of being filled. And that's exactly what happened. And you can see now we finally have, from a daily standpoint, some rise in short activity, but you still have magenta MBI uh, holding up over in the 29 range. It's under the 33 level, which makes it more susceptible to any kind of crossover being a bit more of a dramatic decline. But we're in rising gold at this particular stage, so that's usually enough to hold the supports at this particular stage. I think it's performing just normally. The Nasdaq has been the real leader on this one, and continuing to be super strong, both from a DOC standpoint, cyan under red, always a buy. So no question about that one. There was that one brief moment where we had the DOC spread, and boom, immediate spider. That's where we get that nice little triangle feed, and that was coming off of clean rise in gold. We had a couple of positive extremes before that just needed to get filled, and that's literally what we were expecting from a softness standpoint, and that led to the next run up. Certainly, this whole setup has been under a positive extreme, but we have to have the sell signal before that takes place. From a treasury standpoint, money flocked back into treasuries. Still a bit elevated. The continued softening projections in the economy are going to suggest that from a bond market standpoint, safety is here. So as things get more overbought, the problem is that as things get overbought, people move into treasuries. If the market continues to rise, they have to pull back out of them in order to get back into the market so as not to get too far behind on the returns for the year. We'll see how that one plays out, but more likely than not, that's your fuel for the next push beyond short covering. So it's just understanding that dynamic and seeing how that goes. Oil coming back down below the 70 range, that's healthy for helping the economy at least, limping along keeps everyone in a constant state of, on edge. But at the end of the day, that's better than the alternatives for the most part. Euro continues to soften as it should have quite some time ago, but um, you can see from this positive extreme right back here, we're just pretty much right back in that same zone from the original breakout move that really wasn't a breakout move. It was all about worrying about the debt ceiling and that. And what did they do? They're spending more money than they did the previous year. So that about says it all. I don't think you have to really go into the details of which that and the other. They're going to keep spending more and bigger deficits. So, and from a gold standpoint, holding off of its bottom there, we got the turnaround signal. So that could be enough to stabilize where gold is. Didn't quite fill in the last of the positive extremes. That would be this one right back down here into the 1913. So that still poses a threat. The reality is likely you get a little bit of support here. Doesn't really produce enough to get over that 50% range, and then you roll over. And that's how we look for that P2 pivot, especially coming off of this kind of dip on the DOC. When we look at Bitcoins and them, they had the nice little bounce up, but again, that was just an opportunity to suck some people in. Profit taking already underway on that one, and uh, this is that back and forth. And until there's some kind of significant change in the direction that people think things are going to go, we're getting this sort of like uncertainty trade, which is mostly sideways, but a bit erratic up and down. And so it's just a matter of looking at the overall, and the overall is still fairly decent for crypto. I don't see them in any danger whatsoever of anything other than just eking out sideways to upside gains at this particular stage. So the other day we had marked the various positive extremes from the earliest part to the little later one that took place right about here. We marked that one at that 41.93, and well, lo and behold, we're getting a nice move right to it, which corresponds to the 50% Fibonacci. So from the move coming back right in line, I think that's as clean as it gets. And perfectly expected, but this is certainly much more healthy, and that mean reversion into the setup is certainly giving everybody the opportunity to play both sides of it and still end up pretty close to the same spot that things began. So, from a longer perspective, not so great, but from an intraday, it's pretty good stuff. So, after the initial early morning uh, movements in that, we got to that peak point right there. Nice spike in the MBI white, and that led not just to a zero, but then it kept going from there. And we ended up with a few more spikes that just drove it all the way back down. And then we got the turnaround pop, which took us all the way to the end of the day, and that was just end of day short covering, and that put us into the post market, which we can look at right here, has been just. It looks more dramatic in this thing, but I mean, it's not that many points, and you're down 9 points is relatively minuscule at this particular stage. So, pretty much clearing stops, doing the healthy things. As always, though, we're going to continue to update you on Skype chat and be sending out your indicator renewal. So we'll be all set for the start of June. Trade well. We'll talk to you later.